his guards over me. But today I won't believe. Can you hear it? 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 I won't believe. I won't believe. Can you hear it? Can you hear it? All that voices. Today I won't speak. All the signs around me. Today I won't say all this pain.
Cheers to Hump Day Retail Trading Team. This is Mastro coming to you live from Puppet Show Central with your routine briefing. We cheers to Hump Day because it's another day closer to something actually happening in this extremely exciting, dynamic, and fun market that we're currently experiencing in this month of April. Obviously, I say that with a little bit of facetiousness, as once again, we saw all of today's activity so far really happen in the overnight session. And as we speak right now, we're seeing us kind of retrace that overnight move by a nice 50%, and really not much is going on. So we'll look at the warm up. We'll see what we got cooking, as they say, and so we'll be ready if we do, dare I say, have some type of action today. So yesterday was one of the more slow and opportunity-less days that, if that's a word, opportunity-less days I can remember. I've been trading since 2017, and we're starting to enter the realm of what I call eerie complacency. Um, I've noticed in the past that when we start seeing days stack on top of each other, like you're seeing in this month of April, that are just completely stale and really not much going on, when we do eventually emerge out of that, it usually is quite a good, fun, and opportunity filled market. They do tend to make up for lost time. The exception, of course, being that year of 2017. I didn't really start getting too involved until October, so I did miss most of the fun early in the year. But there is obviously always the chance that that happens again. However, I personally would not expect this low volatility, low action environment to sustain itself for too long. Just given the fact that that 2017 action was as much of an outlier as 2020 was on the other side. So, anyways, so just want to kind of talk about that in the beginning a little bit because I think that we're all getting frustrated. Obviously, if you're an iron fly or zero DT strangle trader, you're loving this. But anybody who's a futures trader, I think, is not really feeling too encouraged by this month of April so far. So I think it's important to remember that this too shall pass. And on the other side of it, if history is to be believed, we will get enough opportunities to make up for it. So that is my silver lining and glass half full view of today's action. So we'll jump right into the warm up and see if we can't analyze exactly what price, volume, and volatility are telling us. So first thing is we do have, if you look at that overnight inventory, we do have just a little bit of that imbalance to the short side. I think that can be used to maybe help explain why we've opened up and we haven't had a downtick. It's just kind of the bulls correcting that imbalance. Remember, this is a very, very strong buy the dip regime, about as strong as it gets in terms of the steepness of the uptrend relative to uh, kind of what volatility and everything else is telling us. So that's my explanation for why we haven't seen a dip since the market opened. It's net short, and it really was quite net short. It's not 100% because of some of the action following Netflix, but really there's a definite imbalance to the sell side. So often that presents good opportunities to buyers. I don't know exactly why, but it presents them good opportunity to recover and maybe fill in some of the profile from the overnight session and from a little bit from the day prior. So if you want to let's look at the execution chart to kind of show you what I mean by that. Pop this out here, and I'm going to redraw this profile in real time real quick. Okay, so we'll go like that. We will get rid of profile so far, and I'll show you what I mean. So we opened up. I'm just going to draw the extreme a little bit before 9:30, and I'm just going to go like this, and we'll drag it out from there. Click it. Okay, so you saw as we open, time and volume built out. I put the anchor in the wrong spot, so let's start this over again. You want to start from the overnight extreme here. And let's really go to that extreme from yesterday. So get a bit a more full picture of everything here. Maybe. Okay. All right. Right there. So I will move this line back up. That's just representing the overnight low. So why are you doing this? I'm going to get rid of one of these, and we'll draw it again in a second because I'm trying to illustrate what's going on here. Okay, so when we open up down there, you can see that value was really at that 65 level. You have that huge LVN that we're now actually into as we speak. But we opened up below value, and so we open up below value. There's an imbalance to the sell side. Price is going to naturally want to go back toward what it considers fair, and the buyer is going to want to bid it back up to what it considers fair. So as the session opens and we kind of move along here, you saw them kind of push up into that first little LVN near that 55 level, fill out a little time and volume there, which shifted value down and brought the POC down to 4160. Remember, the POC is just where the most volume has been transacted. And then as time goes on, they want to go address that pretty ugly low volume node at about that 70 area, and that's kind of where we're pushing into right now. So that's kind of the progression. Um, is that useful to trade around? Not for me personally, but I just think that's a good illustration of what happens when you do open up with an imbalance. Price likes to move back toward what is considered fair prices. So just a quick little digression because once again, we're just watching the paint dry. So that is what I'm looking at there. And I'm just going to go ahead and draw that same profile going like this. All right. That one, and then the one from the prior day high. Okay, there we go. All right, so after that brief digression, let's move it back into that warm up. That was probably a poor explanation, so we'll try it again another time when maybe there's a little more excitement to kind of map that volume profile around. Because you can see today, you had that imbalance, but really when we opened up, you did also have that open auction type look. So no certainty, no aggression, speed, anything like that. Either way, we just kind of hung out below that balance, below what was considered fair value, and then finally, because the bears couldn't do anything, the bulls just did what they like to do and started buying, and that's what happens. That's why you never short a dull market. When nothing's going on, the market tends to just kind of drift up. In fact, it's called upward drift. So we have that open auction for the first 30. You have that really tight, boring IB range of 10 points again, and you are seeing in the profile, at least in my opinion right now, that non-trend type look. So again, it's going to be like most of the past several days. We're going to want to watch how this develops. So right now you're seeing that potential developing double distribution. To me, I am not going to be so quick as to say that the bulls are going to trend from here, because if we go back and look at our execution chart, this zone from about 70 to really 85 is all supply. So you have the underside of that broken ascending triangle, ascending wedge, whatever the hell it's called. You have that is going to be a contender just because of how many times it was support. Remember, support becomes resistance, technical analysis 101. And on top of that, you have a bunch of other levels. You have that LVN, you have that overnight high, you have that high from the Netflix move. So really from about, we'll say 83 down to 70 is going to be strong potential supply. So I'll be looking for a fade trade as soon as we get that rejection with the red candle. The mechanics that I always use, lower low, gets us in. So watching for that potential short pretty soon here. This is actually a nice little move into the supply zone, so we'll see what happens there. And I'm going to come back to the execution chart, by the way, and just kind of explain what all the pretty lines and stuff mean, but I just want to get to the warm-up document first. So all those pretty lines and stuff correspond to these levels here. And I'll go and point them out what the differences mean in the colors and styles, but those are going to be that's going to be where you can find the levels for today. This document does get updated as the day goes on, if and when it's appropriate. So that TPO is one of the main things that is always changing. So you can just come to this document by following that link in the description. And yeah, so that's what we got for the warm-up. Again, volatility is super depressed. And in fact, VX is trying to go red on the day. We'll look at that more in a second. But really, nothing going on. Just standard dip buying into supply zone, looking for that potential short here. So fingers crossed, maybe we'll even get it during the briefing. But these are the levels to watch today. So let's jump to the macro chart, see what we got going on there. The SPY. So yesterday you saw that swing high, potential swing high put in right again at that trend line. So yet another rejection at that trend line. All these rejections are getting a little long in the teeth, methinks. So we'll see if the bears can hold, or if the bulls do indeed finally break through eventually here. I think volatility is going to be the important thing to watch for that. And so again, these are the levels. I just drew these basic supply and demand zones. Not really as important, I think, as these SPY levels itself. So yesterday's SPY candle support and resistance are going to be immediately, I think, the most important levels to watch as we kind of consolidate around here. And if we do get that move down, it's really going to be about those levels on that warm-up document that correspond to ES. So really the main takeaway from this macro document today is watch support and resistance from that SPY candle yesterday, and then also watch how we treat that trend line. So this is just from if you want to draw it yourself, this is just from the October 13th low. That is the important one. That is why it is solid. And then this dotted, dashed, whatever you want to call it, it's dashed, dash line here is from that March low. So that's kind of the wedge, triangle, whatever pretty shape that's supposed to be called. That's what I'm watching there. I really should probably learn proper terms around those so I sound more intelligent in these briefings. So we'll put that on the vision board. But first, we're going to look at the TPO, which we saw a little glance at earlier. Right now, I'm calling it non-trend, although you're seeing a little bit of speed and aggression here. So we're gonna change that. I'm gonna watch it develop to see exactly what it should change to. But you're seeing a nice pop to that single from the overnight session and into that supply zone that we were just talking about. So these levels are all reflected on that execution chart. Like I said, it's really, to me, now that single's cleaned up, we'll probably move it up just a wee bit here. In fact, I'm going to do that in the execution chart as we speak. So now that zone is really about 72, we'll say. 72 up into that 80 area, that poor high, that naked POC, all that can act as potential supply. So, excuse me, we'll see if it holds. And then on the downside there, I think this 60 area is going to 60, 65. We'll say 60. We'll say 60 to 65. The pivot today is really going to be that zone from about 60 to 65. I think if bulls can push us back below that, we might see that continued downward momentum. Obviously, assuming that we also get a bit more activity in the VIX futures themselves. So we'll be watching that, and let's see what is going on right now in VX. Again, not much. Not much. We're right near where we kind of hung out end of the day yesterday, that 1950 area. A potential nice little base here. Maybe you got that nice little inverse end shoulders look, little double bottom here. We'll see if that pans out. But really, until we're back above that 1990 area, I'm not going to get too excited about the down move. Now, we do pop that 1990 area. That is a break out of this channel wedge. Once again, we'll figure out the proper terms. But once we get above that 1990 area, things could potentially get interesting, and we could see that move back toward what I see as the major now resistance of about 2050. So the level on, just to reiterate, the level on VX today for me, I think is 1990. So we'll see what happens around there. So just go back to the execution chart here and talk about what the various levels mean. I'm going to start posting this on my Twitter for the 4 of you who do follow and engage with me there. Once again, Routine Trader, if you're not familiar, that is where I like to hang out, and I'm constantly posting stuff most days when I'm at least actively trading or trying to actively trade. that's the spot where you can find me there. So let me just make sure everything's queued up in case we get the signal here. So we do have that prior day low right here at about 65. I am going to take this trade though. So normally I don't take a trade if we're within N or 0.5 N rather of the nearest potential target. Nearest potential target is potentially that prior day low, and the reason that I'm going to kind of we'll say overrule that mechanic this time is because of the strength of the supply zone above here. I feel comfortable with the risk on that trade. So we'll see what happens. It's got to happen in the next 9 minutes. So we'll be have the finger on the trigger, so to speak, as we kind of go through with these beans. So the yellow levels are the, I think, most important levels that one day trader could look at during any given day, which is the overnight high, overnight low, prior day high, prior day low. Those are always going to be solid yellow because those are my most important breakout and breakdown levels. And so that's what those mean there. A solid white is just a significant support or resistance. And then a zone is, so okay, let's try this again. If it's a zone or just a standard level, if the line or lines are solid, that means that it is a stronger support or resistance, and if they are dashed, it is a tentative but very possibly weak support or resistance. So just to keep it simple, solid, strong, dashed, potentially not strong. Simple enough there. So that's when I'm posting these, and I'll say this a few more times because obviously everyone's not going to be listening to this briefing. But if when you hear that, that's kind of what I'm looking at. If you are listening and you see that, that's what all that means. So yeah, so that is really all I have for you today. There's not too much going on quite yet, so stay tuned on the warm-up document for what happens around the TPO. Stay tuned for the newsletter. I'll send that out here right after I finish talking. And yeah, you can interact with me on either of those. You can engage with me on Twitter or in the comment section of this YouTube video. I appreciate that, with including any critiques, etc. Always trying to make this better and more valuable, no matter what the market is. So if you did enjoy today's content, and especially that super illuminating and very eloquent description of how imbalance works, obviously say that cheekily, but what I don't say cheekily is please give the video a like. I'd really appreciate that. It helps with the YouTube algorithm. So we'll be back tomorrow for a Thursday version of our lovely routine briefing, and I hope to see you then, and stay classy until we talk tomorrow.